Michael Burry drops a bombshell. I'm your host, Steve Van Metre, and thanks for joining me today. And the legendary hedge fund manager says the metaverse will fail and Zuckerberg will be broke. Let's find out why. As Big Short Michael Burry says Facebook is in big trouble and he attacks the social media giant strategy. Meta shares are down 62.3% since January. Back in this article was published in October. His billionaire peers, Elon Musk and Mark Cuban, mock him. Musk nicknamed him Zuck the 14th, an apparent reference to the French king, famous for his hubris and excess. And look what's happened since. Meta stock is down over 70% year to date as the market starts to tell us that it doesn't want this metaverse. But for some reason, Zuckerberg presses on. Let's see what Burry has to say. Many are quick to say that the metaverse is Zuckerberg's biggest mistake, and arguably, with a 70% stock decline, the market agrees. The billionaire's fortune, who's sunk by more than $77 billion, doesn't seem to care. But for legendary investor Michael Burry, there should be no doubt Meta is becoming the new Coke. And he tweeted back in October, seems Meta has a new Coke problem. Now, for those of you who are too young to know about new Coke, what happened is Coca-Cola thought they had a better formula, one that people would like even better than the existing original flavor. They pushed it out to the market, and within months, they scaled it back, put the old product back on the shelves, and eventually canceled the new product. It was an absolute disaster, and that's what Burry's trying to say here. Zuckerberg, if you continue down this path, you've got the new Coke problem. You're going to be turning back to the Facebook plan, and if you continue down this path, you'll likely be broke. And he's not the only one. Billionaire Barry's Diller said there's something quite odd in Mark Zuckerberg's decision to turn Facebook into Meta. If you change the name of your company from something that doesn't yet exist to bury what does wildly exist successfully, something is quite odd in that, and that's a lot of truth. Ultimately, Diller said Zuckerberg would find more success if he stuck to Facebook's original vision, and I think I agree with that. If Zuckerberg would have kept Facebook as Facebook and perhaps worked on Meta in the background, he might not be facing this problem because the ship is starting to sink in a big way. And Meta is now ditching human-curated Facebook news stories globally, adding to the problems the social media giant is facing. Some 3 years after first introducing a curated news section for publishers, Meta confirmed it's ditching the humans and leaning entirely on algorithms. And Facebook News, essentially a dedicated tab inside Facebook that surfaces notable local and international news relevant to each market. Although most of them were already determined algorithmically, there was a top story section curated by humans. And well, as you can imagine, if you don't need them to find the news, you don't need them to do other work. And then what happened is earnings hit, and it was ugly. As Facebook parent Meta's earnings fall short as revenue decline accelerates, Meta's Reality Labs unit, which is driving the company's virtual reality and metaverse efforts, posted revenue of $285 million for the quarter, a decline of nearly 49% from a year ago. This was due to its lower sales of its Quest 2 virtual reality headsets. The unit had an operating loss of $3.7 billion, but you'll note that Zuckerberg doesn't seem to care. Now, I don't know what you think about the metaverse or this virtual reality deal, but I've tried the headsets. I've been in the metaverse. Didn't do much for me. But are you going to be jumping in big on this? Or is this one a trend that you're going to pass on? Weigh in the comments. Horizon Worlds, Meta's flagship metaverse products for consumers, also appears to be a flop as it has fewer than 200,000 monthly active users, with the goal of 500,000 users by the end of the year not being reached. It's a tough time to be a big social media company right now. You're facing a lot of pressures on revenue, usage, and the worsening economy on top of it at a time when Zuckerberg should be focused on his core business and not burning billions. The question is, you might be wondering, why is he bent on taking the company down this path, and who's going to stop him? Well, I'll tell you why in a moment, but as you can imagine, the next shoe to drop that we're going to get this week is when all things are going wrong, when revenues are falling, your product isn't interesting to people. Well, guess who pays the price? Not the top dog. Well, the rank and file. Facebook parent Meta is preparing to notify employees of large-scale layoffs this week, as Wall Street Journal reported back in September that Meta was planning to cut expenses by a whopping 10%, mostly through staff reductions. The cuts are expected to be announced this week, and realistically, as Zuckerberg said, there's probably a bunch of people at the company who shouldn't be here, and a way to say that, hey, if you're having a morale issue, nothing that beats that by your boss saying you probably shouldn't be here. But again, why doesn't Zuckerberg care? Why doesn't he get kicked out of this company? Well, the answer is he can't. And because he's so powerful, he can drive the company down if he continues on this path, or perhaps be forced to pivot before it goes bust. And here's why Mark Zuckerberg can't be fired as CEO of Meta. Despite growing pushback in his multi-billion-dollar metaverse gamble, Zuckerberg has structured a company in a way that makes it nearly impossible for him to leave his role as CEO unless he wants to, making him one of the most powerful CEOs in corporate America. And you got it, that's right. He can pursue his metaverse dreams until the company is practically worthless and not one person can stop him, and here's why. Facebook, which is now Meta, has a dual class structure, meaning the average shareholder owns one type of stock, a Class A, while Zuckerberg and his buddies own another type called Class B. And holders of Class B get 10 votes per share, while Class A holders only get 1 vote, meaning Zuckerberg and the other Class B shareholders are essentially untouchable. And since he owns 90% of the company's Class B stock, he owns enough to maintain absolute control. So as long as he has dreams of the metaverse and he believes it's going to make him even richer and more powerful, he can continue to pump billions and billions of dollars into this. But if he's got it wrong, he not only is sacrificing his entire company, he's taking down his entire net worth with it, and that at a time that consumers are shifting their spending, which could be an ominous problem for the big company that needs advertisers to keep it going. As America's credit card debt grows slowest in 4 months, as braced for post-midterm plunge. And here we can see in this chart from Zero Hedge that even though consumer credit remains very high, it's the trend that matters as we're starting to see a withdrawal from fiscal and monetary stimulus start to hit consumers, and that's not what you want. The trend needs to go higher, but now we're seeing the trend start to slow. And the slowing growth appears to have been driven by a big drop in growth in revolving consumer credit. Credit cards, which just rose $8.323 billion in September, while now revolving debt rose $16.65, the smallest increase in 4 months. And that's having an impact on small businesses who struggle with inflation, labor shortages, because again, we're going into the critical holiday season. We need consumers to be spending and ramping up their spending. Data now showing they're going to downscale their spending, which means businesses are going to advertise less, be a big impact on companies like Meta, who perhaps in the next quarter's earnings are going to show an even greater disaster. Let's dig deeper into the small business report. Owners continue to show a dismal view about future sales and growth in business conditions, but are still looking to hire new workers. Inflation, supply chain disruptions, and labor shortages continue to limit the ability of many small businesses to meet the demand for their products and services, but that soon shall change as we likely experience a deceleration in the economy over the next couple months, and small businesses who are desperate for employees will most likely be shifting and looking to actually try to cut expenses as inventories build. And how bad is it for these small businesses? Well, let's take a look at this chart. From the NFIB, the National Federation of Independent Businesses, we see the data points at 91.3, down from 92.1. And notably, the last time we saw such range, we were just coming out of the great financial crisis, implying that if things continue to get worse, the sentiment for small businesses are going to tank. That means their advertising budgets are going to shrink, and companies like Meta are going to be forced to go back to their core business or face failure. Well, the question is, will Zuckerberg do it or not? Will Burry be right? Well, most likely, he probably will. And with that, I'm Steve Van Meter. Thanks for watching. Thanks for being fans. Bye now.